I want to share with you some of the best inflationary trades of the year. These are more long-term trades. We focus a lot on short-term algorithms, but I do look at some longer-term trades, mainly in options. And I want to talk about inflation here. Crude oil, the OIH, soybeans. Look at this chart of soybeans moving to 1600 quickly. And core CPI inflation excluding food and energy. So in general, inflation, core CPI inflation does not even measure food and energy. And those are the two things I'm going to focus on because I think that those have charts, technically speaking, that are moving higher. Obviously, they're moving higher, as well as fundamental reasons for those to also move higher. Now, one of the most interesting things I've heard the other day from a top analyst for OIH has never been below 450 when oil is at 70. It's never been below 600 when oil is at 80. And that Goldman Sachs says $80 crude oil by the end of the summer. It's right at 65. So it could easily hit $80 by the end of the summer. OIH, will it pop to 600? You can see the opportunity here. If it's above 70, 450 has been the lowest level. I could see, obviously it's only $5 from 70, so crude oil could go to 70, and I don't think OIH is going to go up $250 before crude oil will go to 70. So it may lag, it may not. This rule may be broken. If you see crude oil moving higher, OIH may not reach these levels. Crude oil may hit 70 before OIH hits 450, and it may hit 80 before OIH reaches 600, but I do think there could be a significant move higher in OIH as crude oil moves higher, and I do anticipate higher prices in crude oil, technically speaking and fundamentally speaking. Same in soybeans. You continue to see this massive move off the lows last April. It's around $8 handle. Now it's at 16. It's doubled. It's doubled in price. We know that lumber has quadrupled in price. I don't anticipate a quadrupling of soybeans, but I would not be surprised to see $20 soybeans. Would not be surprised to see $100 to $120 crude oil by the beginning of next year. Same soybeans here as by the beginning of next year, so January soybeans. So those are some of the potentially the best inflationary long-term trades, trying to project prices long-term, taking some low-risk, out-of-the-money call option trades in these, either in the commodity such as crude oil or in the ETF such as OIH. OIH is an ETF that includes Schlumberger, Baker Hughes, and Halliburton are some of the top holdings. There are others in that as well. But oilfield services and XLE is another one. And so those are some potential trades you could consider longer term if you anticipate inflation, put on some low risk out of the money call options, and potentially take those trades.